Right, welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We will wait just a minute here to get started. Let us go live on all the different platforms, let everybody have a chance to jump on, and then we will get it started. Happy Friday, everyone. Hope everyone had a great week. Looking forward to the holiday weekend here. We put the chat up on the screen there for anybody just joining us. Feel free to drop a comment there in the chat while we wait to get started. See people already dropping comments there. Jason, Nicole, Ben, Samantha, Jamie, Rob, everybody tuning in. Mortgage Calculator team. Good morning, everyone. Happy Friday. We'll get started in just a moment. All right, it looks like we are live on all the different platforms, so we will go ahead and get started. Let us take the chat off the screen here and then we'll get into it. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and today's deep dive topic is one of those loans that we specialize in, which is foreign national loans. So every day on this show, we pull up the rates for today for different programs, and then we do a deep dive into a different topic, which our sales manager, Jose Gonzalez, with 27 years of experience, is going to go through foreign national loans today. But before we do that, just like we do every morning, we're going to pull up the live rates for some different programs and go through that. So, Nick, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we will get started. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates for today. It is May 26th, just after 11 a.m. So all of our general rates and terms are live here. We're going to see the general rates and APRs. If you'd like a full breakdown with all of the fees that go into the APR, please get with one of our team members. We have over 300 licensed loan officers in 24 states for primary and second homes. And we can do our business purpose DSCR, which is going to be one of our topics later today with our foreign nationals. That's our most popular option. We can do those in 44 states, so pretty much the whole U.S. So we'll use this tool to check out the general programs today. We're going to set up a nice easy loan amount of $400,000, set up an LTV of 80% loan to value, 20% down payment. And we're going to tell the computer to look for a desired price of 99. That means it's going to find the best rate at one discount point in cost. That's the typical request from our borrowers these days. And we're going to compare our conforming conventional programs to FHA programs. And then we'll check out our non-QM, aka expanded guidelines here, where we have alternative income documentation with over 5,000 additional programs. We do not do the VA programs live. We do have those and can quote those for our active service members and veterans. If you do happen to be eligible for VA, please let us know. But since not everybody is, we don't do that live. And same with USDA. That's only for properties in a USDA area. If you do happen to be shopping there, let us know. We'll quote that, no problem. So we'll start today with our conforming conventional, as we do every day. We'll set up a purchase, 30-year fixed loan, primary occupancy, single family, one unit, state of Florida, county of Miami-Dade. And for all of our demos today, we use an estimated FICO of 760 and an estimated debt to income ratio of 40. So with these settings, let's check out the conventional rates this morning. Oh, we have some upward movement. Unfortunately, a lot of the government news and economic news has not been in our favor. So a little bit higher than yesterday. So best option the computer found is a 7.125 rate for 0.875 discount points and cost. And that's a final APR of 7.287. So a little bit up from the other day. Hopefully next week we see some better announcements and we see some downward momentum. Now with these basic settings, let's compare the APR here. So we can compare apples to apples from our conforming conventional to typically the next option that our customers will look at if they can't qualify with conventional is typically FHA, which does allow a little bit more leniency on the credit guidelines and a higher debt to income ratio. But for the demo, we want to keep everything the same. All we've changed is the program so we can compare apples to apples across the programs. So let's check out our FHA rates this morning. So FHA has gone up a little bit as well, along with the conventional. Best option the computer has, 6.5 rate for 0.875 discount points and costs. And a final APR here, just over 7 at 7.088. So as it has been true for the last few months here, with the new changes to FHA, even with the upfront mortgage insurance and yearly mortgage insurance that is included in the APR in this case is actually a little bit lower for this scenario. So definitely recommend our borrowers out there comparing conventional programs. Don't forget to compare the FHA. In this scenario, it's actually a tad bit cheaper with conventional coming in at about 7.2 APR and the FHA just a tad bit under at 7.08 APR here. Now, if for any reason our borrower does not qualify for either program, that's where we love to come in at the mortgage calculator and present our expanded guidelines, aka non-QM programs. So many other banks and lenders don't have other options. Fortunately, we have over 5,000 additional options here under expanded guidelines. So we'll set up the same exact scenario. Everything is staying the same. However, with the non-QM, we do get to select an alternative income option. So here are our options. Full doc is what we typically use for FHA. Conventional, that's what everybody's used to, 2 years of tax returns. So in this case, we would typically choose non-QM to select a different option. So we have asset-related options, business bank statement options. We have our investor options we'll talk about in a minute. We have personal bank statement options, which is our most popular. RSU stated, VOE, 1099, P&L, no income, all kinds of different options. But the most popular by far is our 12-month personal bank statement option. And that's going to be for our self-employed borrowers. Many times our self-employed borrowers with 2 years of tax returns have various write-offs and have a challenge qualifying at all in some cases, or need to get a little more income on their qualification in order to get that home that they want. So in this case, instead of using 2 years of tax returns, we're simply going to use their last 12 bank statements to determine a debt to income ratio of 40% in this demo, using their actual cash in their bank statements rather than their tax returns. So most self-employed borrowers qualify for much more income and therefore qualify where they want to qualify, or qualify for much more income and therefore get the home that they are dreaming of. So these are great solutions for our borrowers. These non-QM programs are really where we specialize. So let's check out the non-QM rates this morning. Wow, amazing comparison here. So the best option the computer found is a 7.25 rate for 1 discount point in cost and a final APR of 7.317. So remember, conventional was 7.2 something APR. So apples to apples here, we can use a bank statement program for nearly an identical price as conventional. This is amazing, guys. This doesn't happen very often. We are in kind of a weird environment here. So definitely highly recommend all our borrowers out there looking to land a deal. Definitely check out the non-QM options. You will be pleasantly surprised. Might actually be nearly the same price and a lot more flexibility that we're afforded with these programs. So there's tons of different options here. Please get with our team. They'll find which one of these works for you. Some of these at the higher rate options may allow things like bankruptcies and foreclosures and some other flexibility that we're afforded with a non-QM program. Now, before we pass it over to Jose, we always want to do live pricing for our investment properties. So we'll do our final 2 demos here for investment property occupancy. We'll set up the same scenario, 80% loan to value. And for our investors, whether you're a first-time investor or a seasoned investor with multiple properties, we have some amazing options. We can compare our conforming conventional options to our expanded guidelines non-QM, where we really specialize. And just keep in mind, FHA, VA, USDA are not eligible for investments. So we'll simply compare these two options. So first up, we'll compare conforming conventional. Everything's going to stay the same as all our other demos today. The only thing we've edited here is the occupancy to investment. So let's check out how the conventional rates have gone for investment properties. So this is actually one of the non-QM products, so that doesn't count. This is the first conventional one, 7.375 rate for 3.875 discount points and costs, and a final APR of 7.637. So as we say every morning with the conventional programs, they have added additional loan level price adjustments, the agencies that offer these programs. So unfortunately, the computer can't find any one discount point options like we can with the non-QM programs. So many of our investors, although these are great rates, definitely would like typically a little bit higher rate to reduce the discount points. That's where we love to present our non-QM options. So let's go into our final demo today. Set this to investment again. Set up 80% loan to value, 20% down payment. And we'll select our expanded guidelines non-QM for investment properties. So a couple new options pop up. First, we got to select income like we do on all the non-QM. And the most popular for an investment property is going to be our DSCR. And that's because it doesn't require any income or employment from our borrower. We're simply going to use the estimated rental income from the property to determine a DSCR number, which is debt service coverage ratio. If the estimated rental income from the property can cover the PITIA of the mortgage we're proposing here, that is a ratio of 1.00 or higher, aka the property cash flows on a monthly basis, the rents cover the expenses. If the property doesn't quite cash flow on a monthly basis and the DSCR ratio is under 1.00, we still have many options for that. So for our demo today, so we can show all the different options at the different ratios, we'll leave this blank so we can show the most programs. And the final thing we need to select is our prepayment penalty, which is standard for investment properties for non-QM. The standard is always 3 years. That's what we always select on the demo. We can choose 0 if we like. That will limit the amount of loan programs and cost much more. We can also choose 5 years if we like. That will again limit the loan programs. Not all of them allow 5 years, but when we do have it, that does save us a little money. The most common option, however, is 3 years, so that's what we use for our demo. So with these standard settings, let's check out the DSCR rates this morning. So, looks like it went up a little bit. Let's see if we find some options here. Oh, man. So the DSCR rates did go up a tad in this case. So 8.00 rate for 0.725 discount points. We're still solving our investors' problem here with saving the discount points, and a final APR of 8.057. Yesterday, we were just a tad under 7 on, or under 8 on the rate and a tad under 8 on the APR. But again, the non-QM tracked up a little bit along with all of the conventional programs as well. But definitely recommend our investors check these out. Very comparable there. You saw the conventional programs were in the high 7s, and here just a little bit higher cost to use the DSCR, much more flexibility. Our investors, especially our seasoned investors with multiple properties, can start multiple loans, cash out multiple properties, purchase multiple properties. A lot of flexibility here. And we have a ton of different options with different DSCR values. You can see some of these will have different prepayment penalty amounts. Some of these will allow things like bankruptcies and foreclosures, like we talked about. Some of these may allow things like short-term rental income. So please get with our team and they'll find the best option for you. And one of the options that we can do for these programs is for foreign nationals. So that's going to be our topic for today. So let me go ahead and switch my screen and we'll get into our deep dive topic on foreign national loans. So the most popular option is going to be our DSCR option we just went over. But for a foreign national, there's obviously a little bit of restrictions there, which Jose is going to go over. We obviously have to sometimes reduce the LTV and some other things to make these programs eligible for foreign nationals. But these are amazing programs for our investors that are outside of the U.S. So I guess first off, Jose, can you just talk a little bit about what is a foreign national and what is not a foreign national? And then let's get into the programs that we have.
Absolutely. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. First, a little bit of context on what a foreign national is and what a foreign national is not. First, I'll let you know what they are not, because this is the biggest misconception. We many times get borrowers or MLOs reaching out to us with a borrower that has an ITIN, ITIN. And ITIN, usually capitalized, as an acronym for International Tax ID Number. That is what non-permanent resident aliens that are not authorized to work in the United States, that's what they get in order to be able to file tax returns in the US for work-related activities. 1099, whatever it is that they're getting paid, they need that international tax ID number to be able to file the tax return when they do not have a social security number. Since the ITIN borrower does not have permanent legal status in the United States, like a permanent residency card, also known as a green card, nor do they usually have a work authorization permit, also known as an EAD card, then they're not going to have the usual docs that we would have, and they're not going to have a social security number and be able to obtain the credit in the usual manner. They're going to have the ITIN, right? So for this scenario, an ITIN is a borrower living in the U.S. deriving their income from the U.S., whereas a foreign national is a borrower who's a citizen of another country, permanently resides in another country, and does not derive their income from the United States. So if you have a foreign national that's also a permanent resident or a citizen of the U.S., even though they're not currently residing in the U.S., they may be residing in their country where they have their dual citizenship from, they would still be considered a national borrower and not a foreign national borrower. So just be aware of that when you are structuring your loans. So for the first example here, I have some purchase examples for DSCR. Now, before I go into my two different scenarios, I'll explain. One is going to be DSCR, debt service coverage ratio, which is for investment only, which does not require any personal income from that borrower, no account. Usually, for this particular option that I'm sharing with you, for the DSCR options I'm sharing with you, it is going to be the most simplified documentation DSCR option. That's very important to note, because this DSCR option for foreign nationals does not require any credit reference letters from their country, does not require any accountant or actually CPA reference letter from their country, no type of reference letter. And also, if the borrower is not going to be signing in person in the United States, it also does not require the borrower to have a valid passport and a valid visa. Many of you know that not having a valid visa has been an obstacle for many foreign nationals that may have had that visa expired during the pandemic, and they haven't been able to go yet to the consulate or embassy in their country to get a new visa, because the waiting periods are 6 months, 9 months, sometimes even a year for that appointment to renew your visa. So keep in mind now, this DSCR option that I'm sharing with you is a solution to all of these usual stumbling blocks for our foreign nationals. All right, so this one is the maximum LTV, minimum down payment option of 25% down. So 75% LTV is our highest LTV that we can do. And you can start rates at 9.75 with a fee of just, our loan amount here is 375. So that fee is going to be about 3/4 of a point. And then you can buy it down all the way to 8.875, and that's a little bit over 3 points on that loan discount. So this is 75% LTV DSCR. Now we have our 70%, 30% down DSCR. This is an option you may use, for example, either they want to get more down payment, or maybe you're dealing with a condo and the condo may not have the necessary reserve requirement to meet the normal requirements for a full condo review. So you have to be 70% LTV or less. And foreign nationals love buying condos. So just keep in mind, if it is a condo, 9 times out of 10, you're probably going to have to go max 70% LTV. So here you have 9.5%, gives a little bit of a lender credit, and you can buy it down all the way to 8.25%, which is a great rate. But now, if you have the borrower that can go full doc, and we have many borrowers that can. Now, let me explain to you what full doc is in a foreign national. Full doc is usually going to be either, if they're self-employed, it is going to be a CPA letter of self-employment, and there are form letters for that that we can share. And if they are an employee, it's going to be a verification letter similar to the CPA letter, but instead completed by the employer. Some options may actually require a VOE form to be sent, so you do have to check the specific guidelines of the option you're using to see what is the document that is required. But no tax returns usually are going to be required for this program, just a verification of employment from the employer, but the DTI does matter. Usually it has to be kept at 43% DTI or under. Keep that in mind. And then this option is going to require also credit reference letters, one or maybe two credit reference letters from their country of origin. So again, there is increased documentation, but the rates, as you can see here, are much better. This is our 75% LTV, and we're at 8.5 with a $469 lender credit. And you can buy it down all the way down to 7.375. That's a cost probably 3.2, somewhere around there for that loan. So that's very amazing rates. If you notice the rates Nick was just pulling up a little while ago for the investment properties, this is a foreign national full doc investment loan. 7.375 at a 75% LTV, which is the max LTV, whether it's full doc or DSCR for foreign national loans. So if your borrower can do the extra documentation, amazing rates here. So let me give you some cash out options now. Maximum LTV on the cash outs is 70%. Again, this is our DSCR option with no verifications, basically no credit reference, nor CPA letters, nor passport if they're not signing in the U.S. So again, 9.75 gives you a little bit of a lender credit, $88, and you can buy it down to 8.625, and this is 70% LTV. And for our last example here, the full doc cash out option, again, the rate is about 1.125% lower than what we just saw for the DSCR option. You got 8.625, $438 lender credit, and you can buy it down all the way to 7.5%. So again, all you really need to note here with these loans is just make sure you're off to the correct trajectory in the beginning regarding the documentation requirements. Provide the borrower both examples, and then depending on the documentation requirements that can be met, it is the loan path that you will choose.
All right. I don't see any questions in the chat. So I think we can, excuse me. I think we can wrap it up. And just to reiterate, remember, a foreign national is somebody who does not live in the U.S. and does not derive their income from the U.S. That's kind of the easiest way to put it, right? So anybody that's here, residing here, anybody that gets their income from here, remember that's going to fall under something different than a foreign national program. So with that being said, we can wrap it up. Remember, we do this show every weekday at 11 a.m. Eastern. Keep in mind, Monday is a holiday, so we won't be doing it on Monday. So thank you everybody for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all on Tuesday at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great holiday weekend.
Thanks, everybody.
Thank you, everybody.